Hey everybody, what's up? Welcome back to The Wealthy Sailor, the place where we talk about business, personal finance, budgeting, and investing. I am John, and today's topic is insurance. I know, it's a very boring subject to talk about. I know when most of you hear insurance, you think of a middle-aged guy in khaki pants and a polo shirt going around trying to sell you life insurance plans and stuff like that. But that's not me, because right now I'm not even wearing pants. That was my attempt at a joke. It was a dad joke. It took me like 5 minutes to come up with, so please be grateful for that. No, but for real, we're going to be talking about insurance today. The thing is that when I was helping people with their personal finances, I noticed almost nobody worried about insurance. Luckily, they're all in the military, and the military actually provides you with a life insurance plan. Unfortunately, for a lot of the sailors I worked with, they didn't even know stuff like what the payout was or the terms of it. So that's what we're going to be going over today. I think a lot of it is that people don't like thinking about bad things. They don't like planning for bad things to happen. And in this case, people just didn't like thinking about their own death, which is fair. It's a pretty awful thing to have to think about. However, you don't have to think about very much. And then once you get some things kind of out of the way, you can actually sigh a lot of relief about it because your family will be fairly taken care of. The reason I like life insurance, or at least the idea of life insurance, is because God forbid something should happen to me when I'm younger, when it's like sort of unexpected. My family's already going to have to deal with that. They're already going to have to kind of cope with, all the emotional trauma that comes along with that. I don't need to add to that by then also giving them financial problems on top of it. So the idea is that you want to make sure that they're taken care of. Now, if you're independently wealthy, or I guess financially independent, and you have a good reserve savings account, enough to cover all your debts plus your funeral expenses, plus I would say 5 years of living expenses, or at least 5 years of what your income for that living expenses. So if you pay half of your living expenses, then you might want to, but if you have enough money to have all that saved up, then maybe this isn't as important for you, but I would argue that it's equally important for everybody, just about no matter what your situation is. So, what kind of insurances are there? Well, generally speaking, there's two different kinds, and one is term life insurance, and the other one is full life insurance. Basically, term life insurance is for a term, and then full life insurance is meant to actually be paid out. It's meant to actually cover you until the day you die. So, term life insurance is exactly what it sounds like. It's life insurance for a certain term. Now, normally, people tend to get term life insurance when they're younger, and it covers them pretty much until retirement age. The idea being that by the time your term is up, which is usually about 30, 40 years, but they can vary for all kinds of different things. You can get term life insurance for just 10 years. The term will generally be for about 20, 30 years. The idea is that it expires at about the time you retire. The reason that this is set the way it is because think of this insurance as a way of covering your mortgage and your household income, or the portion of the household income that you typically take care of. So the idea is once you're retired, you should already have a bunch of money in your savings, and you should also have your house paid off. This is, again, what happens in a perfect scenario. Obviously, this doesn't always happen. In fact, I would argue that it rarely happens. But in a perfect scenario, that's how it should work, or that's how it's ideally thought of to work. So you reach retirement age. Let's say you get the term life insurance at 30. You have your kids. They're out of the house by the time you're 60. You buy your house, but it's paid off by the time you're 60, and now you're retired. Well, the idea is that now you're retired. You don't have much debt. So basically, you don't need a $100,000 policy or hundreds of $1,000s in a policy, because you don't have the debts to carry with that. Because of the fact that term life insurance is actually rarely actually paid out, because not many people die between age 30 and 60 anymore. Most people live for a lot longer than that. Because it's not really paid out very much, it's not very expensive. My 30-year term life insurance that I got when I was 28 is $40 a month, and it covers me for $400,000 for 30 years. So it's not a bad thing at all. So it's not really a bad thing to have, and it's a nice safety net for my family if anything should happen to me. Additionally, I am personally covered by a policy with my employer because of the nature of my job. Not all of you will have that, but I do know, like fire department, police department, the whole military, like you're not even allowed to waive your right for life insurance in the military anymore. You pretty much are forced to have it. And even if you're married to somebody in the military, you're still able to get the SGLI, which stands for Spousal Government Life Insurance. They say it, but the government doesn't actually hold the policy. It's, they're bidded out to other companies, nationally known companies and stuff. But it's not a bad thing to have. If something unexpected should happen to you, it's a good safety net. Okay, so next we're going to talk about full life insurance. And when I use the term full in this sense, I mean it's meant to last you your entire life. These life insurance policies are generally for a much lower amount of money or much higher premiums because they know for a fact they're going to have to pay you out. So, quick side note, how life insurance works, or really all insurance. They look at your age, they look at health conditions, and they figure out mathematically, when are you most likely to pass away. And they figure out how much money do you want. So they divide the amount of money you want by how many more months you're expected to live per their algorithms. They then add a little bit on top of that so they can make their profit, and that's what they charge you per month. It's like whatever it is plus 10%. And then they take that money while you're alive and paying your premiums every month, and they invest it. So make money off that too. And then when you die, they give you what they previously agreed upon. Now, I looked at some whole life insurance policies, and they're only talking maybe $20,000, if that, if you want to pay a reasonable price. The reason that they're so low is because they're meant for a different purpose than term life. As term life is meant to pay off your debts and to make sure your family's taken care of, full life insurance is only really meant to cover your last wishes, your funeral, any debts you have as you pass, if you have a house that needs to be cleaned out, stuff like that. Think of like full life insurance, whether it's whole or universal, as making sure that nobody gets saddled with any of your debt. Now, quick side note, if you have a life insurance policy, it goes to a beneficiary, but your estate still will carry any debts that the estate has. So, for example, let's say you have a daughter. When you pass away, if your daughter's your beneficiary, she'll get the money. That's fine, but she's also getting your estate, which is separate than your life insurance beneficiary. Your estate is still responsible for any debts you have. So keep that in mind when you're doing your estate planning, that if you have $50,000, $60,000 in credit card debt, then that basically your end result is your daughter is not going to be able to get anything except for your life insurance, because the beneficiaries of that are usually immune from the debts that the estate carries. Every state might be different. I can only speak from Pennsylvania because that's when I have experience with this, when my father passed away. So you might want to look in that and in each individual state to make sure that that's how it goes in your particular state, but that is how it goes in Pennsylvania. Okay, so the different types of full life insurance. You have universal and whole life. Now, if you've ever watched TV during the day, you've seen commercials for both of these. Okay, so here's how it works. You have whole life insurance and universal, and they sound very similar, but they actually have some major differences, and there's a lot of caveats and different rules. So whole life insurance, you actually end up getting, you can get it at any time in your life, but I do suggest you get it while you're younger. You're going to need it when you're older, but get it while you're young. And here's why. You can get locked into a low payment when you're young, and in whole life insurance, your payment will never increase. So if you were to get it when you're 18, it doesn't matter if they find cancer or something when you're 50, because you're already locked in that 18 payment. It's worth it for the company to do it because they get a whole life of your payments for it. And as we already talked about, your payout when you pass away isn't going to be nearly as high as term life insurance because it's only meant to cover certain things. But that was really the main benefit of it. Universal is kind of the same thing, except usually when you're young you pay a much lower rate. Like when you're 18, you might only pay like $10 a month, but it can climb and adjust as you go on. Now, both these insurance policies are really meant to cover the same types of situations. They're for pretty much end of life care or funerals, stuff like that, and final expenses. However, they don't have to. It really just depends on what your situation is. So there are some things you should know about universal and whole coverage. A lot of times they have cash withdrawal features. And sometimes they actually count as an investment, though I would argue, I've done the math on it, and it seems very much like you're only going to collect like 2% of your total investment in that. But it is nice that your money you're paying into this insurance your entire life, and if you stop making payments, you don't just lose everything. You lose a lot of it, but you don't lose everything. There is a cash withdrawal feature and stuff like that. However, I have not used any of these features, so I'm not exactly sure on what the fees are, but I read up on it before making this video, and boy do they have fees. They have a ton of fees, and from what I could tell, best bet is you get about 2 to 3% of the total value of your account. Now, one thing you should know about all life insurance is not dispersed based on what a will says. Now, that's important to know because I'll tell you what happened in the military. We had a guy, and he was about 35, and he died in a motorcycle accident. It was really sad, so we're processing that, and we're making sure his family gets the money. He has a wife and 2 daughters. So we're running through his paperwork, and we look at it, and I don't recognize the name of the woman on his life insurance beneficiary page. And that's because it was his ex-wife. So when he first joined the Navy, he was married, as a lot of people are. He ended up getting divorced. So his new wife, with the kids, did not get any money after he passed away. She was a stay-at-home mom. She relied on him completely, financially speaking. And when he passed away, her and the kids were kind of stuck because he never updated his beneficiary form for 10 years. The thing is that regardless of what your will says, regardless of what your state says about next of kin, when life insurance is paid out, it's literally paid out to whoever's on that beneficiary form. So in this case, the guy's ex-wife, who he didn't talk to for a decade, ended up getting $400,000 for nothing. And we had no legal recourse for it. We explained the situation, and we tried to get her to give the money to, or at least some of it, to the widow and the kids. She refused. And I'm not saying that, I'm not trying to imply she's an awful person or anything like that. That's not really where I'm going with. I'm just saying that if you're doing life insurance, please update your beneficiary forms regularly. I would say at least once a year. It's better for everybody if you do, and it makes people's jobs so much easier. So please do that. And also, make sure that the person that's listed as your beneficiary has the information on like which company that this is with, because if you pass away, these companies rely on them being contacted with a death certificate in order to process the exchange. So what's happened sometimes is that we just don't know which company to contact. Like, we don't know which life insurance policy they have. So that's caused problems too, but that's not really a big deal because there's actually ways of finding that out. It just takes longer. Okay, so for my final thoughts, is life insurance worth it? I would say in most cases it is, especially term life insurance. The simple fact is that if you're watching this video, you're probably an income producer for your household. And the thing is that if something happens to you, that income stops. So you don't want to put that drag on your family. I like to be completely honest here. I don't work for insurance. The only life insurance I have is what came with the military, and then I just signed a contract to have it keep going after the military. So I'm not sure which companies are good. I'm not sure which companies are bad. So do your due diligence before you sign up with any of these companies. But I do think it's a good idea in most cases. So now we're going to talk about whether whole and universal life insurance is worth it. And it's a mixed bag. The thing is, with me in my situation, even though I have whole life insurance, the thing that's really important here is you covering your end of life expenses. Well, if anybody's watching this video, you know I'm really big on having an emergency account and a reserve fund and stuff like that. So I have enough assets to cover, whatever funeral I want to have when I pass away, and I'm relatively debt-free except for the mortgages, which was what the term life insurance is for. So I don't think I really need it. Now I'm going to keep it because I've been paying on it for years anyway, so I might as well just have it. The thing is, though, is that I don't necessarily think it's something I need right now, but here's the caveat to that. You're not paying for it for you need right now, you're paying for it for you need when you actually pass away, because remember, whole life and universal are going to stay with you until the day you actually pass. So the thing is that even though you might not need it now, you have no idea what's going to be in the future, and I'm locked in at such a low rate that I might as well just keep it going. Well, anyway, guys, I hope you found this video informational and educational. Give me a thumbs up. No thumbs down. We don't do that here. Give me a subscribe and leave me a comment if you have any input or anything like that. Thanks for watching and keep saving.